Ever wondered why financial investment is a buzzword in today's world? Well, it's not just a trend or a fad. Financial investment is a crucial step towards ensuring financial security and growth. It's about making your money work for you, growing your wealth, and securing your future. It's about gaining financial freedom and the ability to live life on your own terms. Financial investment allows you to create a safety net for unexpected life events, save for retirement, and even achieve specific financial goals. Throughout this video, we'll be providing an overview of different types of investments, from stocks and bonds to real estate and mutual funds. We'll also be offering tips for beginners, helping you navigate the complex world of investing with confidence. So, whether you're a seasoned investor or just starting out, there's something here for everyone. Now that we understand why investing is crucial, let's delve into the types of investments available to us. So, what are the different types of investments one can make? Well, let's start with stocks. These are essentially shares of ownership in a company. When you buy a stock, you're buying a piece of that company. Your returns are based on the company's performance in the market. If the company does well, the value of your stock goes up. But if the company doesn't perform well, the value of your stock could go down. Next up, we have bonds. Unlike stocks, bonds are debt securities. When you buy a bond, you're essentially lending money to a corporation or a government. In return, they promise to pay you back with a certain amount of interest after a set period. Bonds are generally considered less risky than stocks, but the potential returns are also often lower. Then there's real estate investment. This involves buying property with the aim of generating income, either through rental income or the future resale of the property. Real estate can be a great way to build wealth, but it's also a complex field with its own set of risks and challenges. Lastly, let's talk about mutual funds. A mutual fund is a type of investment that pools money from many investors to invest in a diversified portfolio of stocks, bonds, or other securities. Mutual funds are managed by professionals, which can be a big advantage for those who don't have the time or expertise to manage their own investments. Each of these investment types has its own potential benefits and risks. Stocks can offer high returns but come with higher risk. Bonds are lower risk but offer lower returns. Real estate can provide a steady income stream, but it requires a significant upfront investment. And mutual funds offer diversification and professional management, but they also come with fees and other costs. Knowing the types of investments is just the beginning. It's equally important to understand the relationship between risk and return. Ever heard the phrase, no risk, no return? Let's unpack that. In the world of investing, risk and return are like two sides of the same coin. You can't have one without the other. The potential for higher returns often comes with a higher level of risk. And here's where it gets personal. Your level of comfort with risk or your risk tolerance is unique to you. Maybe you're the adventurous type, willing to take on more risk for the chance at higher returns. Or perhaps you're more cautious, preferring to stick with safer bets even if the potential returns are lower. It's a balancing act, guided by your financial goals and your current life circumstances. Understanding your own risk tolerance is key to making sound investment decisions. With risk and return in the back of our minds, let's move on to setting clear investment goals. What's your financial dream? Buying a house? Retirement? Let's talk about setting investment goals. Just as a sailor needs a compass to navigate the seas, we need clear investment goals to guide us through the financial ocean. Without these goals, we're like ships without rudders, drifting aimlessly and at the mercy of the market's unpredictable waves. Setting investment goals isn't just about dreaming big, it's about defining what you want to achieve and when you want to achieve it. For instance, you might be aiming for retirement planning. You're looking forward into your golden years and want to ensure you have a comfortable nest egg waiting for you. Or perhaps you're focusing on wealth accumulation, steadily building your financial assets over time. Maybe you're saving for a specific milestone, like buying your first home or funding your child's education. Goals set the path for our investment journey. Now, let's discuss some strategies to navigate this path. Now that we have our goals, how do we reach them? Let's talk strategies. First up, dollar cost averaging. This is the practice of investing a set amount of money at regular intervals, no matter the price. It's a disciplined approach that allows us to buy more shares when prices are low and fewer when prices are high, potentially lowering the total average cost per share over time. Next, let's consider diversification. This is essentially not putting all our eggs in one basket. By spreading our investments across different asset classes, we can potentially reduce risk. If one investment performs poorly, others may perform well, balancing the overall performance. Finally, there's long-term investing. This approach plays the long game, focusing on growth over an extended period. Despite short-term market fluctuations, history shows that investments, particularly in stocks, tend to increase in value over the long term. Armed with these strategies, we're ready to choose our investments. Ready to invest? Here are some tips for selecting suitable investments. First, dive into research. Understand each investment option before you put your money in. The internet is a vast ocean of knowledge, and it's important to learn about the pros, cons, and potential risks of the investment you're considering. Next, don't shy away from consultation. Financial advisors or professionals can provide valuable insights and help you navigate the complex world of investing. Their expertise can be a beacon guiding you through the fog of financial jargon and complex decisions. Lastly, always consider your goals and risk tolerance. Align your investments with your personal financial objectives and how much risk you're willing to take. Whether you're saving for retirement, planning for a major purchase, or simply growing your wealth, your investment choices should reflect these goals. So we've covered the basics of investing. Let's wrap up. We've covered a lot today, haven't we? Let's summarize. We began by understanding the importance of financial investment and how it is a stepping stone towards securing our future. We explored the various types of investments like stocks, bonds, real estate, and mutual funds, each with its own unique features and benefits. We dived into the concept of risk and return, reminding ourselves that higher returns often come with higher risks. We emphasized the significance of setting clear, achievable investment goals, be it for retirement, wealth accumulation, or a special milestone. We also discussed basic investment strategies like dollar cost averaging, diversification, and long-term investing. Lastly, we looked at how to choose investments wisely by conducting thorough research, consulting professionals, and aligning choices with our goals and risk tolerance. Remember, the journey of investing is a marathon, not a sprint. Start your investment journey with caution and diligence, and never stop learning.